Hi guys, good evening. Welcome to the month of June. Okay, so I welcome you guys. So welcome. Let's go for live. So we're gonna be going doing a recap of what we've done so far in the last two class we've had. Yeah, so that's what we're gonna be doing, and I'm gonna be showing us my screen right now. Yeah. So we've been trying to work on this here on this topic. So let me just close on the words now. Okay. So we've been working on building a strategy. We said it's an intro to edge development. In the previous class, we talked about the Forex trading strategy, the types, the concept, and the implementation. And our goal lecture right here was to equip beginners traders with a solid understanding of what types or the types of Forex trading strategies, because we have diverse strategies. We want to tell beginners traders who are going to be transitioning to the intermediate class the unique strengths and how to begin testing and applying them in a live or a demo environment. Then we went down to understanding, the trading strategy. Said that the strategy in Forex trading is a set of rules and guidelines that help a trader identify, enter, manage, and exit trade in a consistent manner. The word consistent is the key word there. Keyword consistent manner. It helps you to be able to trade like a machine. Imagine programming the machine to do a particular job, just like the LED light. You're programming it to to just blink at a particular frequency, right? Or you have a timer in place. Okay, you have to be. That's what it's going to do. It's not going to go faster. It's not going to go slower. It's going to go at that pace. Or you've programmed your computer in a sense that it's only for image creation. It's not going to do any other thing than to create image. That's what being mechanical is, a specific task. So that's what we're trying to teach our beginners traders who are going to be transitioning to intermediate, then to advanced classes, all of these things. We say each strategy includes market conditions, your entry rules, your exit rules, your risk management, and the time frame in which all of this strategy works. Not all strategy works on um, all time frames. Some there are time frame specifics. Okay. Then number two, we went to talk about the types of forex strategies. We said we have the six core types of trading strategies that a beginner should understand, moving on to the next level. Number one, here we have the trend following strategy. And the concept, the trend is your friend. It's telling you to always move with the tide. When I say move with the tide, it means if the current of the water is going east, you want to go east with it. You don't want to go west. All right. If the traffic is going on the fast lane, let's say like Third Mainland Bridge, I'm using Nigeria as a case study, Lagos, Third Mainland Bridge. You're moving this way. You don't want to move against traffic. You want to move in line with traffic. So you don't get squashed. So that's it. Moving with the trend is the best thing you can ever do in any trading strategy, especially in this trend trading strategy. You want to move with the trend. The objective here, we said, enter in the direction of a clearly established trend. All right, then we have the tools we can use, moving averages, when you tweak it to the 50 and the 200 EMA, that's the exponential moving average crossovers. Then we have the trend lines. Then we have the price action. Then we have our price action has to do with our highs and higher lows, as we've always studied. Then we have the ideal time frame for this trend trading strategy. This ideal time frame is the 1 hour to the daily. And we have an example here. So let me just quickly since we're trying to do a recap, I want to do an implementation of this quickly. So let's see. I'm going to open a trading view. Okay, super charts. super charts. Then let's see. Let's get.
Let me open who's there. Go ahead.
Sorry, please. Can you mute your mic? I don't know who that person is, but please, thank you very much. All right. All right. So this is. Let me just delete this phone right now. So we were talking about right here, talking about the trend following strategy. The trend is your friend. So this is a trend. Let me use a capital letter. All right. So what we're looking for is this. We have different the trends. We have the uptrend, right? This is the uptrend, and then we have let's have this guy on, right? We have this guy, the- we have the downtrend. All right. So this is the only trends we have. Then we have the ranging markets, as another yeah. So the range, market range. But we're not going to be doing this, but just for context, let's just put this guy in. All right. So now this is the training market we have, but we are here for specifics. We talked about the moving average crossovers. So I want to show you how to use the moving average crossovers. Okay. So you want to come over to, let's go to small time frame at the 4 hour. Remember, they said we could use it 1 hour or the daily, that 1 hour to the daily. So let's look at this guy first of all. Let's use the EMAs first. So you want to go to your indicator. You want to click on EMA. You see the moving average exponential, double EMA, triple EMA. So you can click on the double EMA. There are some that have been like for specifics, they've always been fixed. You can see all this one's down. So just click the double EMA. Yeah, then you get to tweak it like later. But for those of us who want to do it manually, you can click the moving average exponential one time, then click for the second time. So you have two on your screen. Yeah, then when you've done that, you want to like zoom in closer and double click on it. So you can bring out the settings. Now this is the settings for the, so all right. So now we've seen the settings. When you double click on it, let's change this to red, right? Like the blood red. And let's impute this length to be at 200. 200 EMA, right? Because that's the settings we're given. And then we'll tweak this guy to be what? 50. That's the second settings we're given. And right, okay, this is it. Now we can clearly see the EMAs. And let's go back to the instruction. What did it say here? Remember, look at it. Say price is above the 200 EMA, indicating an uptrend, which means that when price is below it, it's indicating a downtrend. Right? So right now we can clearly see that the market is above the EMA from this level, and you can see the market has been what pushing to the upside. It's been an uptrend. So this is how you use the exponential moving average. We're not going to go in depth knowledge of this. This is well in the intermediate class, we don't have like proper knowledge of all of this stuff. So let's move to the second one. We're going to move to the trend lines, right? Trend lines. So I'm going to take these guys out. Just come to the left side, the right side of your screen. Just put remove EMA, and you're good to go. So we talked about using the daily and the 1 hour. So let's use the daily right now for our trend lines. Let's use the daily. Now remember the way I taught you guys how to mark out your trend. If you're looking for an uptrend, you want to see the uptrend go from a level of support to a level, right? You want to see the market rally from a level of support. Presently, in this current price action, we can see this level right here, this one and this one as our level of support. Why is that? Because the market has created what we call a double what? or even a triple bottom, right? Look at it. Let's make this guy thick. So that is a level of what support, a triple bottom. The market has hesitated one, two, three times, right? Which means that's a clear level of what support. You want to take a trend line tool on the left hand side. On the second tool, you see the trend line tool. You can take it across on the level of support. Hits the first what when you're marking out an uptrend, you want to mark out the trough. When you're marking out the downtrend, you want to mark out the peak. So from the trough, you want to take this to the second one. When it hits the second one, you stop there. Then you extend to the future and see how price has reacted so far. Now we can see how price has reacted from here. One, two, three touches. Then price came here, it could not hold, and what it broke down. That is good. So this is an uptrend. This is an uptrend market. And this is a classic uptrend because the market always has to give like three touches. One, two, and three. Now, this is how you use the trend line, the trend following strategy. Whenever you see a bounce on the trend line, you want to mark that zone and to a position to buy. So that's what we're going to see for the trend line. Then let's go to the next one. We have the price action, market creating higher highs and higher lows. This is the trend following strategy. Now we're going to do this right now. So we want to get into the NAS 100 again. So let's take out all of these things we've done so far. All right. So let's take this out so far. So now the market is creating what we call the higher highs and the higher lows. What do you want to see? You want to see something like this. Let me take this out maybe a little bit more. Yeah, let's take this out. All right. So we want to take our highlighter tool. Remember how we said we'll be doing this thing. Whenever you see an uptrend, what do you want to see? You want to see a shift in structure, right? Now the market has been in a downtrend from this level. Then at some point in time, we found what support. Our support is always. You want to leave that level there. You want to make this guy thick. Yeah. So now I found support. Then the market started to do something. I want you guys to follow me. Follow me closely. So the market created what? A high. I would say that high is always red. Then it created what? A low. Our low is always what? Blue. Then market created a high. You understand? That's always red. The market created a low. Yeah. Then the market created what? Another high. You can see another high here. Okay. Doesn't look significant, but it is a high. Then you will see another low here. So you will see something like this. Then the market created a high. Let's go to the significant point. So we don't like waste too much time. The market created a low here. So guys, with this, you've been able to know that this is what the higher highs, higher lows, and this is also a trend following strategy, telling you that whenever the market creates a low, you're expecting a new high. So whenever you see take a dip, what you want to do is you want to wait for the markets to give you an area of interest where you can likely wait for the markets, the price to fall to, then you can buy when it's low. That's in an uptrend. Same thing here. See the market's up, you already know it's coming down. You can wait for this level, what to buy from. Same thing, market went up, came down. So that's how it is. Okay, guys. Done that. Let's take everything out from this and let's move to the next. I don't want us to take too much time on this. Then you can clearly see the ideal time frame is from the H1 to the daily time frame because this gives you clarity, for this particular trend following strategy. Okay, so we're gonna have a lot of examples later on in the future, but for now, let's just work with what we have. So guys, moving on to the next. Moving on to the next, we have the counter trend strategy. Apologies. The counter trend strategy. This concept, it means catch the market reversal from an overextended trend. When the market is overextended, it means that it has passed its threshold. The expected threshold is overextended. So what people are waiting for is just for it to knock off. It's just like let's relate it to our light issues in Nigeria here. When NEPA has given you light for so long, you start to like panic and say, when they will really take this light to get, you're expecting them to take this light, even if you've been like they've been giving you light for weeks, even for months without interruption. So it's just something like that. So what you're expecting now is what a reversal of what is already happening. I think we have about 8 participants here, so everyone will welcome again. So our objective is to enter against the trend that what that when we see a sign of exhaustion appear. What you want to see here is you want to use tools like your RSI divergence. When two assets are diverging, means they are going separate. One is either creating a higher high and the other one creating a lower high. Okay. So now, what you want to see is what you want to see your support and resistance. Also, you want to use your double tops and bottoms and trend line breaks. So a great example is what we did here. Sorry for this. A great example is what we did here earlier. Where we marked out, they said, remember, the market will always come from a level of support. Remember, in this example, we are using bullish trends. We're just focusing on bullish trends, so we don't have to be everywhere and okay. So this works both on your bearish trend too. Okay, so your counter trading strategy. The first one here we talked about the RSI divergence, support resistance, and uh then the double tops and bottom. So let's start with the double top bottom trend line breaks. Yeah. So now we have this level. Yeah. Remember how our trend line is when you want to take two peaks, right? This guy and this guy. I mean, two peaks or two troughs. Yeah. So this we're taking the troughs of this rise axis. We want to place it here first. After a year, we want to extend it to the future. Now you can see how price has reacted so far on this. Right now at this level, just right here, you can see when the market came down to tap into this trend line, it could not hold. It broke. You see, at this level trend line break. The market has what broken structure and it has what formed a downtrend. So that is what this is also an example. That's what we're seeing right here. You can see as your trend line break, you want to counter trend. The market's an uptrend now. You want to short. What you do is at this level, when the market has come down, you want to see it hit this trend line again, just like it did here. Let me zoom in a little. All right. You want to see it hit this level. Once it hits this level, once it hits this level, then you want to now like position yourself to sell the asset. And with this, you'd have been able to get a good peak level, make good money from this counter trend strategy. You can see immediately the market got exhausted, decided to reverse. All right, so there's also a lot of things that goes into play in as regards to strategy. So you would also want to wait for some confirmations. Also, we talked about RSI divergence. What you want to do right now is you want to go to your indicator, RSI. Okay, click on your RSI divergence indicator. You can see it's gonna pop right here. And if you look at exactly beautiful. So what do you want to see? You want to see the markets creating a divergence between prices. So you want to, in an uptrend, you want to look at the highs, right? You want to see if this high, if it's creating higher highs, you want to see the market create lower highs on the divergence, right? You want to see it create lower highs on your RSI. So something like this right here now, we can see this guy, this asset, this beautiful one right here, this one right here. You can see the market at this point in time created what? This is a high, right? That's a high. This is a higher what? Higher low, right? Now we have our higher high here in red. Okay, now you can see this is what's an uptrend because the market watch has created a higher high. While this one, you can see this one, this high, if you take it across, it's higher than this level. But this level is the same level with this. Look at this. They are linked. This one is linked like this. Now you can see that this one is creating a lower high, while this up one, the actual asset is creating a higher. So this is a divergence. And you can see the indicator now showed us that because of that, what it signaled us to sell this market. So if you had sold this market, even though it's an uptrend, you'd have sold it what to the trend line, which is a counter trending strategy. Whenever you see this divergence happen, what you're waiting for is the next what confirmation candle, which is this one right here. And at that point in time is where you want to short this trade. All right, you want to sell to the trend line because you know it's an uptrend, you're just counter trending. Okay. All right, so that's it about the RSI divergence. Let's take this guy out. Delete this guy too. Okay, so what am I doing? Hold on. All right, so This is how you want to play it out. Let's go to the next one. Then you also want to work with support and resistance. So let's find support and resistance on this asset. All right. So this is an uptrend still. Let's take this guy out. Let's take this guy out. All right. So now, remember we said market must come from a level of what support, and this has been our support that we've been using for a while now. This is also a level. And remember, this high created what? This low, right? This high in red created this low. Let me mark this low to be blue for context sake. All right. All right. So we have more shades of blue. Remember, now, because of this high, is a previous level where price decided to fall from. It has become what a psychological level which is going to act as resistance in the future. So what you want to do is you want to extend that level out. You want to shoot it out. Also, you can see subsequent highs like below it, right? You can see highs like this. This one, you extend it to the future. You can see how it's reacting and it's affecting other future prices. Yeah, so you can see this level. You can see these levels. All right. So what you want to do now, what you want to do is this. You want to see price in this nature, support and resistance. How can you counter trend? Right? I know this is an uptrend. The market is creating an uptrend, but whenever I see the market hit what a resistance level, which is a former key level, I want to sell from there. So at some point in time, what you want to do is whenever the market hits levels like this, you want to sell short. Whenever it hits this level like this, when the market comes up, you want to sell. If you're a scalper, you're going to be making a lot of money from all of this kind of trades. Whenever it hits a key level like this, you want to sell. So there are other better ways to do this, but this is in the form of a scalper way, right? You can see this one did not hold well, it just broke and what escaped from there. So let's try and see if we can get even a much better support and resistance level, like this key level here. And this one right here, you can see this one is so significant that it affected this price, and this price sold at this point in time. You see it sold here. Then remember, this is a counter turning strategy. You're not expected to hold this trade for a long time. You're just scalping price from it. So that's it about the counter trending strategy. Let's see. Someone has sent me a message, but I'm going to review the message soon. So please hold on. I'm not ignoring your text. Okay? I'm not ignoring. Oh, what am I doing, man? Okay. So let's check. Talked about double top, double bottom. So even without explaining this, we can clearly see at this level right here, you can see our what double top and double bottom here. Look at the double what bottom. You can see this one. Let's take this guy out first. You can see this guy. One, this is two. Now this is a triple top, triple bottom, which is very good. It gives you added confirmation. So even if you entered from here, this is your neckline, right? Remember, this is your neckline. This level, market has broken out. What we're expecting the market to come back and tag you in. Clearly, I don't want to do another strategy, but you can clearly see an order here. The market came to retest this level and push upward. So this is very good. This is what a W pattern. The market broke out, out of the neckline, came and retest, and now giving us what this. So this is a very, very, very good one. And I don't think I need to go even further with this particular setup. So let's me just erase a few of these things, then you can go on to the next, guys. On to the next, and to the next. So let me read the message whilst I do that. Someone said a question. Please hold on. I'm going to attend to your question very soon. I just want us to have back-to-back sections without interruptions. And towards the end of the class, we'll have our questions. So now, we've been able to talk about the counter trend strategy. It's a strategy that should not be done to hold positions for a long time. Okay, you don't want to hold positions. This kind of trade, you just want to do it in and out. That's within 15 minutes, right? 15 minutes, 5 minutes. This is mostly for scalpers or sometimes short-term day traders. You don't want to hold it for hours. It's going to reverse straight up because you're going against the tide, going against the trend. So we have the breakout strategy. This concept is means you have to enter as price breaks out of a divine range or pattern. The objective is to ride the momentum of your breakout. the tools is here, consolidation zone. You want to see patterns like the rectangle, the triangle. You want to use your volume indicator. You want to use news event like the NFP. We have NFP coming up in this month of June. Every first week of the month of June, of a new month, NFP always comes out. So you want to use all of these words to gauge. Let's see if we can get some patterns like the rectangle and the triangle and see how we can take advantage of it, but advantage of the breakouts. All right, so where can we spot a rectangle? A rectangle is more like a range, okay? You want to see the market range in the market in a place for a while before it moves out. So we can see, I can see some here, but I want to do something that has to do with what we're doing. Okay, presently, let's use this one. You can see this level right here. This is a range, right? This is a rectangle. It's a range. This one is also a range. You can see the market what's just giving weeks. Yeah, even this one, but this is like in the opposite end of what we're actually expecting. This one too. This is a range. You remember what a range is? I told us the range, the market is just creating equal highs and equal lows. Now you can see how explosive. Whenever the market range after that, the market will always push upward. Whenever I range for a while, then it push the market aggressively upward. Now I range for a while, then push the market towards aggressively out. Now you can see another range right here. See this one, this guy right here. See the market will range after a while, but then push aggressively, right? So that's how it is. You're waiting for the breakout. What did the price level tell us? It said you want to what? You want to ride the momentum of the breakout. So whenever I see a range like this, my expectation is I want to wait for it to break out of this level. So let me try and see how we can further trade this if we're to trade this. Let's see. Let's see. All right. So this is it. Remember, I said it's creating equal highs and equal lows. You want to come to your tools here. You want to use your rectangle, and you want to just get the highest point of that price level and the lowest point of the price level. And this is what it looks like. Now, what you're expecting to market to do is this. You want to see the market break out to the candle here. Then on a smaller time frame, you want to see that candle what retest, just like this one printed right here. And at this second candle is where you want to enter your position for a long position. You want to enter something like this, risking just below, right? Just below the previous, then ride it upward. So this is how you're going to be trading this range momentum ride, this breakout. So this is how you're going to do it. Now for the reverse, you can see this right here. You can see this marketplace where the market has ranged so far. You can see this, right? You can see it up to this point. Now you can see the break and the recess, right? See, this is what this bullish candle that came back. That's where you want to stay and you want to ride the market what for a short position. At that point in time, just risking maybe just below, just above there, you know. Yeah, but this is when you're trading this kind of strategy. But it's advisable to always go with the trend. So, what is the two ways you can do this? So, guys, all right, all right. So let's wait and see. Let's go to the next one. Okay, this we have about 5 minutes on this particular call, and I'm going to send in another link for us to join. See if that particular account is connected. All right. So, but whilst we wait for that, let's keep going. So we talked about volume indicators. You want to also come to the indicator. You want to write volume. I explained this in the last class. Click on volume. We're going to see some like a lot of this stuff popping up. Let's see if we can change the color and make it even more solid. Yeah. So let's use something thicker or catchy. Yes, yes. Then let's use the red, the red one. Let's use the stick red. All right. So you can see now clearly on the screen. This is what it looks like. So it shows you where there is what influx, there's liquidity in the market. It tells you when the market is like there's enough opportunities to follow a strong trend, or where the market has lost volume, where it's very small and choppy, where there are not a lot of participants. So these are what you want to be looking out for in this with the volume indicators. Right now, you can see how the depth of this market, when you took a deep, you can see how the volume rose with a very movement right here. You can see some little areas where the markets really didn't really have much momentum, and the place with the large spikes are where the market actually moved more. So this is how you trade this with this kind of indicator. I don't use this. It's not that reliable, but there's some levels like if you're using a hedge fund, so you can use a lot of indicators to back up. And the volume is also good. It's always good to know volume, but you can use other things. But it's always good to know the volume of participants in the market. All right, so we see the strengths and see the weaknesses of this particular strategy. The strength is it captures strong impulsive moves, just like the NFP. The weakness is prone to what false breakouts. See, that's why it's not so reliable. Yeah. So let's move to the next one. We have 3 minutes on this call, and I'm going to send the link for the next one. The pullback slash retest strategy. This concept means you have to enter after a breakout or a trend continuation, or on a pullback. The market does two movements. It does an impulsive movement and a corrective movement. So whenever it's doing the corrective movement, that's when you want to enter to continue to trend, or enter after a breakout when the market has broken out, that break and retest strategy. That's what we talked about earlier. Similar. So that's what we want to do. And we want to use tools like your Fibonacci retracement, break and retest zones, candlestick confirmation, the pin bar, the engulfing candle. This is where you have to talk about the reversal candlestick patterns. And we've done that in previous classes. So you want to go back and watch those videos about reversal candlestick patterns. Let's see before time runs out. So we want to use our Fibonacci. Remember, on a Fibonacci, what are you looking for to do? You want to what? Let's use this place as a case study. You want to they want to use the market. You want the market to what? From a swing high to a swing low, right? So let's mark out our swing highs. Let's mark out our swing lows. Let's go to tools. Use our highlighter. Okay, so we have our what? We have a what? A low here. A high. Then we have this market rally down, very slow. Then we have this what? High right here. So I said I was going to use blue as our low, so I don't get us confused. Okay. Then we have this high right here in form of red. Then we have this low. Okay. Now, before we got this low, how do we know we're going to get this low? Someone is sending me a message also. Please, I'm going to answer all our questions later, but presently we are working with the Fibonacci. Remember what we talked about. Okay, this class is going to end up in 1 minute anytime from now. So I'm going to be sending the next link to the group chat. So I'll be seeing you guys there. So let me send in the link. Let's wait. Let me end this one.